right, looks like we've got people streaming in now. Give everyone just a second to kind of get loaded up here. Good afternoon, everyone. All right, we'll get started in just a second as more people are streaming in. I'll go ahead and mention a few things. If you want to chat, throw in the chat, where you're from and what the weather's like where you're at. That'd be great to just say hi. No pressure, but we'd certainly welcome that. Give everyone just another couple 10, 15 seconds here. All right. All right, I think we've got a good group of people. Let's go ahead and kick things off. My name is Brian Anderson. I'm one of the product solutions engineer with the ProShop team. We're here today with Vanessa Oviatt and Amanda Arnold from Moss Adams, who are going to lead us through this webinar to go through R&D tax credits. For some of us, there might be a lot of mystery. Some of you might already know a little bit of information, but what we want to do is kind of dive into that topic and really get to know a little bit more about that. As we move forward, a couple of quick housekeeping options. Like I said, if you want to throw in, a simple hello in the chat, that's great. We love that. I see Denny's Indiana, Perry from New York, Thomas from Wisconsin. Great, nice to see everyone. Let's keep kind of the chat just to kind of, the hello stuff. But at the same time, if you have questions, we'd like you to use the Q&A function for that. That way we can kind of prioritize them and make sure that we can get to those. We should be having some time toward the end of the presentation for some Q&A stuff. So like I said, we'll use the Q&A chat box to log all that and get to that. With that, Vanessa, would you like to go ahead and introduce yourself and kind of move forward?
Yes. Hi, everyone. Yes, my name is Vanessa Ovian, and I'm from Moss Adams. I'm a managing director there in our federal credits and incentives team. Primarily, I've done R&D tax credits, as what we're going to be talking about today, but have also been involved in other federal credits as well. I've been practicing in public accounting for about 15 years, and primarily focus on the aerospace industry. So happy to be here and kind of talk through the R&D credit and some other items. And then pass it on to Amanda.
Hi there, my name's Amanda Arnold. I am a senior manager in our Moss Adams Federal Tax Incentives Group. I sit in the Spokane, Washington office, so near Seattle. But I've been doing R&D tax credits for the last 10 years, and really my main focus is manufacturing with an emphasis on aerospace, and I have done some work in the technology area as well. Excited to be here and chat more with you about R&D credits and everything about it.
Okay. So yeah, we'll get started today. Do you want to go on the next slide? So here's just a very high level agenda. We put this together so that we can have a kind of a Q&A session at the end. But as we go along, feel free to kind of put any questions you have in the chat. But today we're going to be talking about the R&D tax credit and providing an overview, as well as the Section 174 amortization, which has an impact on kind of what your final tax liability could be potentially. We're going to talk about some of the key R&D tax credit misconceptions, as well as some tax filing tips for manufacturers. So, great. So we'll start with an overview. So the R&D tax credit is something that's been around for a long time. It was created to provide an incentive for companies to, keep innovating and, developing new products or processes, and meant for it to stay within the U.S. So any activities that are in the U.S. Could potentially be eligible for this R&D tax credit. We aren't able to take any foreign research activities, but there are some implications to that on the 174 side that we'll get into a little bit later. The R&D tax credit is really great because it's a dollar for dollar tax savings that directly reduces your company's tax liability. And there really is no limitation to the amount of expenses that that you're able to incur and get a credit on. And you can claim a credit annually on your federal tax return. And there's also a way for you to be able to carry back that credit 1 year as well as forward for 20 years. So even if you aren't able to utilize your credit in a particular year, it's something that can continue to be carried forward for when you do have tax liability. You are allowed to amend your prior 3 tax returns in order to claim that R&D credit retrospectively. We have had instances where we can go back even further. It's just a bit of a different process to kind of build up that carry forward if we're able to utilize it. But in order to actually amend and create an election on your return, you're able to go back 3 years. There's also state opportunities as well. So not all 50 states have an R&D credit, but I think roughly, can't remember the last time I looked, but around 30 states have an R&D type credit that generally follow the federal rules. And so usually when we're scoping out a new client, we also look into any potential state opportunity as well. Next slide. So here we're going to give a quick overview of just like the general expenses that we see for that can be eligible for the credit. So wages is usually going to be our biggest one. So those are going to be the actual employees that are involved in the R&D activity. And so we take a look at their Form W-2 or Box 1 wages. And we can even look to, depending on your entity type, some of the pass-through income that's subject to self-employment tax. So, that can be through some of those partnerships where we can still take some of that as well as part of that wage. Then for any qualifying employees, if more than 80% of their time is spent on R&D activities, there's a rule where you can essentially increase that to 100%. So as long as you meet that 80% rule, potentially their entire wage could be eligible for the tax credit. So wages is usually where we see kind of the biggest expense, and that's for all those employees that are involved. Another one, which maybe isn't as common, but we're seeing it a lot more now in manufacturers, is going to be any cloud computing expenses. So that is going to be for anyone that could be hosting any kind of software that's under development. So usually there's like a testing environment of sorts within the cloud, and we're able to take those costs. One thing to note here, with manufacturers particularly, is sometimes there is internal R&D where software might be being improved, for your internal capabilities. So this is typically where we would see some of those cloud computing costs. The other big area is going to be supplies. So any supplies or materials that are used or consumed during the qualified research activity could be eligible for the credit. So typically with manufacturers, we're seeing anything related to like first article runs. So all that material where we're still trying to figure out, kind of in that prototype stage, those materials could potentially be eligible for the credit. And tooling, I think, is another big one, or any molds that you might use within the manufacturing process is some other ones that come to mind in the manufacturing space. For contractors, any payments that are made to contractors that are physically performing work in the US can be eligible for the credit. There is a rule where they're capped at 65%. So even if 100% of their time is spent on an R&D activity, there's still going to be a haircut for them. But it's still, expenses that can be eligible for the credit. And again, just to emphasize, it's for physically performing work in the US. So it doesn't matter, and this even goes for employees too that may be overseas, but even if they don't need to be a citizen of the United States to be able to be eligible, they just have to be physically performing the work here. So sometimes we get maybe there's like a foreign contractor or a foreign employee that flies over to the US to perform some like installation work or something along those lines, that's related to the R&D activity, and then we could still qualify their time. So just something to think about there. But generally, these are the four categories that we're going to be looking at for the R&D credit. So I kind of briefly mentioned this, but 174, Section 174, there was a new rule that kind of came into play starting in 2022. So we've kind of been in this for the last couple of years where rather than being able to expense all of those items that are related to R&D, which is what the old rule was, now you have to capitalize. So only a portion of the those expenses can be amortized in a given year. So it's kind of a timing difference on when you can actually recognize some of those expenses. So in 2022, any of the domestic, starting in 22, any of the domestic research that was performed in the US has to be amortized, capitalized over the 5 years. And then foreign research is over 15 years. And so there's just, again, a timing difference for when you're actually going to receive that benefit. So this really impacted a lot of companies, who were mostly involved in R&D activities, and anyone who had previously claimed R&D credits. And it's something that is still in effect today. Now, this could be something that changes in the future, where maybe they go back to the old rules where you can just expense everything in the year, in that same year. But right now, this is the rule that's in place, and so we're going to continue to see that through 2025. So high level, these are some of the impacts that you'll see with 174. So the 174 capitalization can increase like your taxable income, and then which could then lead to higher tax liability. So it is going to be an add back that affects that final number. In which case, if you're a loss company, this will also reduce your net operating losses in that given year. The tax that's paid out could potentially increase over that 5-year period until you start recognizing that benefit. And from what we've seen, it's also increased estimated tax payments and could potentially impact cash flow. So unfortunately, everything I'm talking about here is a negative impact and probably affects most, small to mid-sized companies the most. But the credit in itself is still a benefit. It's just something that's going to be realized over time. And the credit does help offset some of this negative impact. So we're still seeing a lot of our clients, continue to claim the R&D tax credit. And there's just a little bit more tax planning and tax strategy that may be involved due to this 174 impact. But I think one last thing to say here is because there's overlap, and the reason we're mentioning here is that the R&D credit overlaps with a lot of the 174 rules. And so even though 174 has like a broader category of expenses that we need to look at, there is overlap. So a lot of the time when we're doing these R&D studies, we're also doing a 174 analysis because we want to maximize your credit benefit, but also minimize your 174 impact. Yeah. And then I'll hand it over to Amanda to just kind of talk about some of the key misconceptions that we see related to the R&D tax.
Yeah, thanks, Vanessa. So in this segment, we will cover the common misconceptions regarding the R&D credit. In our experience, we have ran into several scenarios that have caused companies to miss out on claiming the credit altogether. And so we just kind of wanted to cover some of these top ones that we've seen. So, if the credit's available to your company, you're able to take advantage of that. So the first common misconception is that the organization isn't paying federal income tax. And while that may be true, and the credit may not be currently usable because of a net operating loss, it still can be, as Vanessa mentioned earlier, carried forward back 1 year and also up to 20 years. So that option's still available. But what I really want to point out here is that there is a second option, and this is really for companies that are in the startup phase and have less than 5 million in gross receipts for the current credit year and have had no gross receipts or interest dating back the prior 5 years. So this is a really great opportunity for some of those startups who are in the first 5 years to generate a credit if they're performing R&D tax credits. They can generate and use up to $500,000 of that credit each year, and this credit will be used to offset their payroll tax. So how it works is there's a special election on the Form 6765, which is the federal form that's filed on your tax return. And essentially, that election allows us to utilize the credit and push it towards the payroll tax credits or payroll tax that's being generated on the quarterly 941s. And so we've seen a lot of companies benefit from this option, especially when they're in a net operating loss on the federal side. So it just kind of helps offset some of those other taxes that they're generating. Common misconception number 2 is that there is only one credit option, and that's actually not the case. When we're generating a federal tax credit, there's 2 ways we can look at it. The regular research credit method, which basically takes into consideration the first year of gross receipts and qualified research expenditures. So if you are a company that has been around for a long time, we would essentially go back to the beginning to identify some of those gross receipts and then the qualified research expenditures that have been generated along the way. This method, especially if you're a company that's been around for a while, can be pretty difficult to generate, especially if you don't have the resources to go back that far or don't have the records to prove out some of that qualified research expenditure detail. And so the IRS has created a second option, which basically takes into consideration the current year, the qualified research expenditures that are being generated in that current year, and then it looks back to the 3 prior years. So it eliminates having to go back to the beginning and allows for just that 4-year period of research look back. So a really great option if you're a company that's been around for a while. The third misconception is that the company isn't focused on R&D. So the credit is not limited to companies that are performing scientific, high-tech, life science work and have dedicated research departments. In fact, most of our companies that we perform R&D credits for don't have R&D laboratories or designated departments specific to R&D. We are looking at folks that are truly involved in the R&D process in their manufacturing facilities. So these can be engineers, project managers, any laborers, welders, anybody who is specifically involved in the R&D process as it relates to identifying a process of experimentation and trying to overcome technical uncertainties that are coming up during product development or process improvements. Those are the individuals that are getting pulled into the credit. So definitely a misconception here and hopefully helps kind of bridge the gap on that one. And then just kind of laying this out. So I wanted to be able to give you a sense of what kind of activities we're seeing in the manufacturing space that would qualify for the credit. And the first is really just coming up with those initial design concepts, testing the prototypes and building out the pilot models, introducing new technologies to the manufacturing process. Process improvements are a huge thing in manufacturing, and we see a lot of that as projects that have built out the R&D credit. Other things that even Vanessa mentioned earlier, so developing any custom equipment that's being needed to build out that manufacturing part or component, tooling, fixtures, any of those custom designed things that are necessary in order to create that product are things that we would look for. Um, Always testing alternative materials. This is really important, especially if you're trying to improve performance or just the manufacturability of the product and part itself. Creating specialized technologies. We've seen a lot of AI or robotics going into the manufacturing space, and so there's been some work around that and some definitely some R&D time that we've been able to pick up. Developing any software application. So this is what Vanessa was kind of mentioning earlier, just any internal software that's being utilized to expand or help develop the overall manufacturing itself. Any ERP systems. I know ProShop is definitely one that maybe and hopefully all of you are using, but building out that software and customizing it so that it works with your company are activities that we can look for. Um, and then developing new methods for sustainability. So, how do we keep manufacturability running and how do we keep moving these parts at a good pace? And is there any improvements that can be made along the way? So those are definitely activities that all kind of fall under that R&D umbrella. The next misconception is that employees aren't holding degrees, and we don't have any engineers or scientists on staff. Companies with large number of engineers and scientists definitely stand out for the credit, but we're not limited to only taking folks with those degrees. We're seeing a lot of employees, third-party contractors that have differing job titles and backgrounds. These folks maybe have years of experience who are very inundated in the initial design concept development, actually creating the component, pushing it through for testing, and then also first article runs. So we're seeing a slew of individuals who have different backgrounds that we're able to include. The piece that I want to point out here is that the activities that the team is performing need to have an element of experimentation. So, if there's a specific challenge that comes up during the development process or coming up with that process improvement, being able to overcome that challenge with experimentation, whether it be trial and error, success or failure testing, all of those things need to be present in order to qualify for the credit. So as long as we have that element, it helps kind of support and substantiate, including other individuals' time. Another misconception is that the company isn't developing anything new. And so this really ties back to our four-part test, and I'll go over that in the next slide. But essentially, the team just needs to be designing, developing, or improving existing products or the creating new things. The other element is process improvements, coming up with new techniques, if there's formulas, or even that software element where maybe it's an implementation of a new ERP system. So those are all areas that we kind of focus on to determine qualified activities. Key aspects of the R&D credit. So the credit is calculated based on increases in research and development expenditures on a yearly basis. So it's really aiming to reward those companies that are investing into their company and trying to determine new products, new processes, new things to be innovative within the company as a whole. The research doesn't necessarily need to be new to you or new to the world. It just needs to be new to the company. So if this is a process or a product that's been around for years and you're trying to implement that into your company, but haven't quite figured out how you're going to do that, what's that recipe from the start, coming up with the initial design specs, going through the development process, and then testing it out. Those are all aspects of R&D that we would focus on. And then, as I mentioned, the company just needs to be engaged in activities that meet our four-part test, which we'll go to next. So the first part of the test is having a permitted purpose. So this is really going back to identifying what that business component is. Is it developing a new or improved product, process that's resulting in an increase in performance, reliability, or quality? Those are kind of the main aspects we're looking for when identifying that initial business component or project that you're working on. And then the second piece is that it needs to be technological in nature. This is really an overarching bucket that we want to make sure the elements are present as we're looking at the R&D credit. All activities must rely on hard sciences. So we're talking engineering, physical, biological, structural, chemical, computer sciences. Those are really the sciences that meet that criteria. Other things like accounting, marketing, sales, those would be considered business science and wouldn't necessarily be qualified for the credit. And then technical uncertainty and process of experimentation really kind of work hand in hand together. So just in general, when coming up with a new product or a new process, there's going to be technical challenges that come up. And so this technical uncertainty piece is really the act of discovering information that would eliminate your uncertainty. So that can be regarding the capability, the method, how you're going to design it, what's the process going to look like from the beginning in order to get you from your initial concept to your final goal. And then the process of experimentation is really the act of identifying what those alternatives are throughout the process. So if you have a first article run that you processed, it failed, how do we come up with an alternative to still try to meet our goal? Generally, we see this through trial and error testing, success or failure testing, modeling, simulation, and those sorts of different tests. And then the last misconception is that the company is subject to alternative minimum tax. We don't see this a lot, but I did want to just point it out because as of January 1st, 2016, any company that is paying alternative minimum tax is able to utilize the credit to offset both regular federal taxes and AMT. This is based on eligible small businesses. So eligible small businesses are defined as companies that are non-publicly traded and have average revenue of 50 million or less. So as long as that criteria is met, if you are paying AMT after 2016, we're able to offset that tax with the R&D tax credit. And then the next segment is going to be tax filing tips for manufacturers. And so we wanted to put this section together really to try and provide some advice as it relates to the R&D tax credit and kind of what to look for as we're moving forward in the year. And maybe you've extended your tax return. So it's just some things to think about as you move into that extension filing season. So and this is something that Vanessa mentioned earlier, but really the Section 174 amortization, it's in a lot of senses reducing, if you're in a net operating loss position, it's reducing that net operating loss because you're not able to take that a lot of the expense deduction in the current year. And so the R&D tax credit can be used to offset some of that tax increase if for whatever reason you're no longer in losses because of 174. We're looking at the R&D credit to kind of help bridge that gap a little bit. It also is, an enhancement in the future. So providing additional benefits for taxpayers, specifically with 174. We don't know if 174 is going to go away, but we're hopeful that it will. But now that we're in our third year of following the 174 capitalization amortization rules, we do think that there's going to be a future for the R&D credit and just enhancing and how it can offset some of that impact from the capitalization. And then as Vanessa mentioned earlier, any unused R&D credits that aren't used in the current year can be carried forward up to 20 years and back one if needed to help offset really any of that 174 capitalization if there was a situation where it maybe pushed you into a taxable position sooner than you were hoping. Hopefully we can have some of those credits in your bank to kind of help offset some of that. And then we also wanted you to be aware of just some changes in 2024 for the 2024 tax filing. Starting on February 10th, 2025, the IRS came out with a new Form 6765. And so there are some sections in here that must be complied with for the 2024 tax year. And I'll kind of walk through the section that's an optional section for this year. But for 2024, Section E and F are now be required. These are new sections, basically asking to report all of the qualified research expenses via a summary. And so basically, what that looks like is in the process, we're asking just to identify all of the business components that are generating qualified research expenses. We need to be able to lay that out and share that information on the 6765. Historically, we didn't have to submit that information to the IRS, but now that it's a requirement, we're spending a lot more time to identify what those business components are and really how much of the expenses are being allocated to each of those business components. The other question that they're asking for is whether any officers were a part of the R&D process. So we're having to disclose how much of their wage was being utilized towards that R&D activity. And then also, if any of our qualified research expenditures were related to an acquisition or disposition that came up during the tax year 2024, we'll need to be able to show how much of the expenses are being allocated from that event. And then the other sections that they're asking about are any new categories of expenses. So if there's a new department that maybe came into play for 2024, they'll want to know that. And if there's any big changes that have occurred from 2023 to 24 that would have impacted a large increase in your credit or a large decrease, we'll need to disclose that. And then the biggest one that I want to walk through is just the members of the control group. So historically, we haven't had to disclose all of the entities that are a part of a control group, but on the new form, there are specific attachments that are needed if your company is a part of a control group. Really, this information is being utilized to show the IRS where the qualified research expenditures are being generated. So if there's multiple entities that are generating R&D expenses, we'll need to be able to break that out and disclose it. And then this is the last section. So section G, this is a optional section for tax year 2024, unless you're amending your tax return. So an amended tax return has different requirements and that we must follow. And there's a deeper process that goes into that. And so section G is one of the requirements in order to do that. Section G really includes identifying the control group member, the EIN, principal activity code. It also wants to see the specific business components. So this really goes back to identifying all of the projects that are qualified under R&D and listing them out on this section G form. And so really what they're wanting to see is up to 50 business components or at least 80% of the qualified research expenditures that were generated. So if you have a lot of projects, it could be a little bit cumbersome in identifying some of those projects and listing them out and identifying how much of the expense is going towards each project. They also would like to know whether or not the business component is a software component, or if it's hardware, that's just the delineation that they'd like to see. And then also the business components need to be broken down by the qualified research expenditures. So whether there's wages, supplies, contract research, or even that cloud computing component that Vanessa mentioned earlier, just needs to be broken out by activity type. And then the last section, I'll hand it back to Vanessa to talk through documentation.
Yeah. Thanks, Amanda. So yeah, documentation is really important to make sure that we're meeting all those requirements for the four-part test. So we're, coming at it from a perspective of what's going to happen to the credit if it were to go under an IRS exam. And so there's a lot of court cases, a lot of rules around what the IRS requires in order to claim these R&D credits under federal tax return. And so, we help with a lot of this documentation. And so there's really two parts to this. There's the quantitative piece, which, we've talked through. Okay, here are all the expenses, like, such as your Form W-2 Box 1 data that you're going to need for your employees. When we're looking at supplies or even contractor expenses, we get down to the general ledger detail to look at the vendors, so we can determine whether their activities qualify and meet the four-part test. There's also going to be requirements around tracking those R&D activities by what we call a business component. And that can be, that could be the project, that could be the part. It kind of depends on how you define business component, but there needs to be some kind of nexus where you can attach those activities of what we're qualifying back to the project that the individual is working on. And then, of course, if you're using ProShop, there are ways to utilize some of that tracking, whether that's being tracked to the activity or to the project itself. And so that's what's going to encompass the quantitative side of how you're actually getting to your final number and making sure that you have that documentation in place in case of an IRS exam. The qualitative piece, which I think is the kind of the bigger one, that we want to make sure that you have in place is the one where there's going to be a lot more work involved because the people that are performing the work will probably need to be involved in getting this documentation together. But starting with just project descriptions or project plans, whether it's just summarizing what you did through the year, maybe you're doing that on a quarterly basis, a monthly basis, at whatever frequency makes sense, but just being able to put together, here's what we did on the project, there were some challenges that we faced throughout the project, and being able to write that up is important. Other documentation can include, okay, actually, like, here are all the design revisions that we had for this particular part, and making sure you retain those. Maybe test logs and reports, when you're doing the testing. Oh, this is, what we had to do during that first article run and through that prototype phase. And this is how many iterations we went through, is helpful. And then any notes, presentations, emails. So any of that documentation, really where it's showing what development activities were occurring, during that year, is going to be helpful if there is an eventual IRS exam regarding your credit. So we just wanted to make sure that we spent a little bit of time talking about this, because I think this is really where it comes down to whether you're following the IRS guidance that's out there and being able to claim those credits. Because once those numbers no longer return, we want to make sure that this is still in place and that it gets retained, because that IRS exam can happen 1 year down the road, it could happen 5 years down the road, and they could even be looking at multiple years. So we want to make sure that you're organized and keeping and retaining all that information. Next slide. So high level, we've talked about a lot of things regarding 174, as well as the R&D credit, but this is just to all say, tax planning and communication with your tax provider is important, because you want to get get that conversation going early on in the year, especially when we're talking about compliance with IRC Section 174, because you don't want to get to the end and it's the filing deadline and all of a sudden you have a really big tax bill or tax liability that you have to pay, and you weren't aware of it, and that's because 174 came into play. So just having those planning and strategy meetings, talking about it as early as you can with your tax provider is going to be important so you don't get a surprise down the road. And then, really talking about other tax credits, maybe not just R&D, there are other federal incentives and state incentives out there. So talking to your provider about what other cost saving opportunities there are will also help kind of offset anything that may be related to 174. And there is a automatic method change in place for Section 174 for the 2024 tax period. So it's just something to keep in mind. If you don't take advantage of that automatic method change, then it's going to be a lot more paperwork and a bit more of a headache down the road with 174, because then you have to do an official method change, which is just a bigger process involved when you're filing your return. So just being able to have those conversations, get ahead of that, talk to your tax return provider, to see what opportunities there are, it's just gonna, you're gonna be able to get those benefits, whether it's the R&D credit, related to the R&D credit or related to. So I believe that is everything that we wanted to cover today, because we wanted to leave some room for questions. And I do know that we had at least one question come in that I'll just kind of kick off with starting to answer. So the question was, are QMS updates qualified under the 4-part test for the credit? And I would say that this is probably a little bit of a gray area when it comes to the R&D credit. So I know that those updates are usually regulatory. They're driven by a regulatory body. And so typically, if it's something that's going to be required for the business, potential, I would say conservatively, it's probably not going to be eligible for the R&D credit. However, usually if you're implementing this in some kind of a system, and you need to make those updates, it's possible that there's probably some development that occurs in order to make those updates. So potentially you could qualify some of those activity from the employee level side of things, but if it's kind of like one of those routine maintenance updates, it doesn't require a lot of work to be able to make those updates. I'm going to conservatively say it's not qualified. So I know it's a bit of a gray area there, but I think there could be potential to include some, but it really comes down to how much time is really going to be spent on them, and is it kind of worth going after any of those costs or those expenses there?
Yeah, Vanessa, I'd like to actually add a little bit of flavor to that if I can, just sort of put a little bit of a different lens on it. Let's say for a moment a company is implementing QMS so they can win prototype or R&D work with a new client, a new customer. So the idea of them putting the QMS in place is so they can open up the field to actually do that work in the first place, which they wouldn't be qualified to do if they didn't have a QMS. Would that qualify the QMS as part of the R&D tax credit, or would that be a separate thing and the work itself would be what would qualify for the credit?
Yeah, I mean, I guess my conservative lens on it would be that it potentially it could still, some of it could qualify if you're like actively, having to do some development, like you said, to create, that new process within the QMS system in order for you to do that. So that time that is spent on there could potentially qualify for the R&D credit in order to do that work. I think we just want to make sure that we're stepping away from, what's something that may be like routine, that's part of the business, isn't going to require a lot of effort involved to be able to create that change. And so yes, I think my answer will be potentially, yes, you could qualify some of those to
Yeah,
update.
yeah. I think a qualified answer is warranted there for sure. Yeah, yeah. No, that's great. Thank you for that. Thank you for that. So if anyone else has any questions, like I said before, feel free to pop them into the Q&A. I want to start off by saying thank you, everyone, for joining. Thank you, Vanessa and Amanda. That was great. I'll add a couple of sort of things that came to my mind as I was following along. I think the idea of identifying the work we do as potentially qualifying for the tax credit is hugely important, regardless of what system you use. Uh, you know, I would try to identify that in real time. So later, when you go to do the reporting, you don't have to try to remember all the different projects you worked on. You have some way of cataloging that. Obviously, in ProShop, we have different methods we use with work order type, class, even monitoring different clients and projects. Lots of different ways to classify work. To track down the reports related to that, labor and expenses to all of those different projects. Of course, in ProShop, like I said, there's lots of ways to do that. But any system that you're using, it would be very, very prudent to start that process right away. When you think you have something that is going to qualify for that tax credit, um, go ahead and get that marked down so you don't have to try to remember it 6 months down the road. All right, looks like we have another question here. I'll go ahead and read this and we can kind of answer it from there. So it sounds like identifying various things like processes, wages, materials, etc. as R&D tax credit eligible would make it quite difficult to pay future tax bills due to the current amortization rules, as your net income is considered higher, even though it isn't. And you need to be able to pay even more in tax payments despite not having more in the bank. Am I missing something here? And then there's a second section, but maybe I'll pause right there and you can kind of lean into that.
Yeah. So I'll start by saying that the really the rule, like nothing really changed in terms of like how you're going to be qualifying for the credit. And I think what's different here with the 174 is that this became a compliance issue. So regardless if you're going to be claiming a credit or not, there is a 174 compliance requirement. So that's just part of your general federal tax return requirements that you have to assess. So by knowing that, and especially if you're a company that does do R&D work, whether you've claimed a credit in the past or not, this is now a compliance issue. So because the 174 is there, it becomes a matter of, okay, well, since we're going to have to identify these items anyway for the federal tax return, doing the R&D credit will help kind of offset some of, unfortunately, yes, not a great, that kind of negative impact from 174. Before, when you did the credit, you could expense immediately all those expenses within the current year, but now they're spreading that over 5 years. And so you're still going to be getting, in the first year of claiming, you're going to get 10% of amortization. So that 10% can be expensed. And then you're getting little by little. So it's a timing difference. And so it looks worse than it is, especially in that first year, because, you went from, not having this requirement to now having to be compliant to this. And so the credit is still valuable. And it's just spread over the 5 years when you're receiving that benefit. But I think the point I would like to stress is that 174 is compliance based, like for the return. And so whether or not you want to claim the credit or not, that's still, optional to be able to do that, but the credit will help offset that over a period of time.
Right.
And are the definitions for R&D the same for section 174 and for R&D? Good question. So there is overlap. So a lot of the things, so I guess the way that we usually say it is that things that are R&D are 174, but not everything that is 174 is R&D. So when you look at, the Venn diagram, there's just that kind of like overlap in the middle of what it is. So all the expenses that we're talking about for R&D, whether it's wages, the cloud computing costs, contractors, or supplies, that is all going to be 174. So usually when we're doing an R&D study, you're kind of doing twofold work because that is going to be 174. But the definition of 174 is broader and actually has to take into consideration indirect costs related to R&D activities. And so you're going to be looking at things like overhead costs, facility costs, maybe taxes, fringe benefits that you need to pay your employees that do R&D, laptops that they might have. You have to look at depreciation. So there's a list of things that you need to look at for 174. So your 174 number actually ends up being higher than what you're picking up for R&D costs. So again, your R&D benefit is going to help offset some of that add back for 174, but unfortunately, it's not going to cover everything because 174 is broader definition. So yeah, I'll pause there, but happy to answer more questions about that. But yeah, there is an overlap between the two.
Great. Thank you for that. Yeah. So, like I said, we've got just a few minutes left. If anyone's got anything else, let's go ahead and ask them. If not, and somebody thinks of something after the fact, and they want to reach out, what would be the best way for them to contact you?
Yeah, definitely. Yeah. So you could definitely reach out to me or Amanda. We're both in this space. This is what we do every day with the R&D tax credit. And we do spend a lot of time with manufacturers and just generally in the aerospace industry. So happy to answer some more specific questions. You can reach out to either of us on email. And that should be, I believe it's included kind of as part of this. But yeah, Vanessa.oviet@misconceptions.com and Amanda.arnold@misconceptions.com. So, feel free to reach out to us if you have any specific questions or would like to, learn any more.
Right. Yeah. Yeah. And we will be sending out a follow-up after this with a link to the recorded session so people can go back and review it and get some more of that information. So there'll be some opportunity to see the contact information there. And of course, if you have any questions about how ProShop can help you manage this, please feel free to reach out to our team. ProShopERP.com would be a great way to just sort of start the ball rolling there. If you're already a customer, of course, just reach out to your implementation specialist or customer service manager, and they'll make sure that you're pointed in the right direction. All right. Well, that was nice and tidy. Really great information, like I said. I don't see any more questions coming in. I think we could probably go ahead and wrap this up, give everyone a little bit of their day, a few extra minutes of their day. And yeah, thank you both for that very thorough walkthrough. Learned a little bit myself, even though it's not my realm, but it was nice to sit through that.
Okay, well, thanks for having us. Appreciate it.
Yeah, thank you so much.
All right.
Bye, everyone.
Bye.
Bye.